Anita wants to purchase a home for $300,000 and she's doing the 1% down payment program I told you about. So that's $3,000. She will need to come up with that. But there are also closing costs, which come around to about 4%. So an additional $9,000. So she might need $12,000. Having $12,000 in savings could be a big barrier to getting a home. But luckily with her realtor, she was able to negotiate with the seller so that the seller would contribute 3% to her closing costs. And so that canceled it out. And now she needs to bring $3,000 to closing. Only let's work together to determine your numbers. In general, I say it's great to have at least $5,000 saved or that you can have gifted to you in total before you buy your home, because there's going to be expenses associated with moving, buying new things, maybe doing some repairs. So I do like to see that. So that's mistake number one, is not planning for that. So now you've seen a little bit about how much down payment you need, an estimate of how much closing costs are, and an idea of like the minimum amount that you should have saved, $3,000, $5,000, $6,000, so that you can go forward. Mistake number two is people not getting a pre-approval. So if you're going to be a home buyer, not just a home looker, not just a renter who says, I want to buy, the best thing you can do is get pre-approved. And so the mistake is not getting pre-approved and thinking that somehow you're magically going to find the home of your dreams and buy it. And let's see what it goes into pre-qualification and why it's actually so important. Why you should do this. You will know how much you can afford. Yes, that's what you'll learn. We'll tell you the maximum home budget you can afford and how much that will cost you each month. Then from there, you can decide, do I want to max it out or do I want to get something that's more affordable so that I have more space in my monthly budget? The next reason you might want to get pre-qualified is it'll help you focus on the right market. So knowing your budget and how much you can afford will make sure you don't go to places that you can't even afford, because that is definitely a waste of time. It's hard to go and visit a place, get really attached to it, and then find out you can't get it. So know from the beginning if you can get it or not. Gives you that confidence to know that you can get it, and also proves to the sellers that you're a serious buyer. So they will require a pre-qualification letter in order to probably accept any offers you put in, because without it, unless you have cash, they have no way of knowing that you can actually buy the house. And this will also help you see what are the costs involved with buying a home. Those closing costs, all of the different line items will be done in the estimation for you when you get pre-qualified. So this is just a knowledge building activity, and it actually gives you the ability to act. So there are three parts to a mortgage. We're going to be looking at your credit score and your monthly debt amounts. We're going to be looking at your income, and we're going to be looking at your down payment amount. And so these are the things that we'll be discussing when you get on that call that are going to make sure that we can give you that pre-approval at the correct amount. Also, when you're getting a pre-qualification, it focuses on your DTI, which is debt to income ratio. Luckily, in today's world, lenders are focusing on affordability, setting you up for success, and not giving you a loan that you will not be able to afford, which is great because you've done all that work and you would lose all that money if you can't afford to pay your home. So the maximum payment amount that you would ever be qualified for would be 50% of your monthly pre-tax income. So just to keep that in mind. Now let's take a look at what are the prices in general. This is from the US Census Bureau in 2024. The median monthly rent in the US is around $1,369 a month, whereas the median mortgage payment is around $900. So we're seeing that a lot of times, depending on where you want to live and the kind of house you want to live in, that the payments associated with owning a home or renting can be similar. And in Florida, depending on where you want to buy, it could be cheaper than renting. And you'll also get all those other benefits of controlling who lives with you, controlling what you do on your property, having all that stability. No one can tell you when to leave unless you don't pay your mortgage. So you got to pay your mortgage. I'm going to show you a few maps that talk about homes that are less than $300,000. Why? A lot of first-time home buyers are interested in just getting in the market for the first time. Once you own a home, you either might start to go on in your career and make more money, Or maybe your home will go up in value and you'll be able to trade it to go live somewhere else. You'll be building equity over time as you pay off your mortgage. So it might become easier to afford a larger or more expensive home the second time around. So I start off with $300,000 as just a baseline, and that is around $2,500 payment. And that would require a minimum monthly income of $5,000 or around $60,000 a year salary to qualify. So again, depending on your personal situation, this is just a baseline to see where you could qualify so you can start to get that in your mind. So what can $300,000 buy in Florida? Well, this is just a photo of a really great place I found in Palm Bay, which is here in Brevard County. But you can go ahead on Redfin and Zillow and check out what is available for around $300,000 or at a budget that you feel comfortable paying and see what that means to you. But people sometimes say, there's so many expensive things. That could be true. In Brevard County, we have around 726 homes at $300,000 or below. And those are 2 or more bedrooms, townhouses, and single family homes. Well, for my folks from Orlando, they have 355 homes at that rate. When I went down to Miami just to check it out, that's one of the most expensive cities in Florida. And zooming in this much, there are 100 homes, which include, in this case, condos, townhomes, and single family homes at 100 at 300,000. But if you zoom out a little bit and include going up to Pompano Beach and going all the way down to Homestead, you've got 3,500 homes. So there are things to choose from. You just might want to have a realtor to check it out. So again, before we go on to our next chat, I want to take a small breather, remind you to check this booking link out. Remind you that if you're getting value here, you can definitely get more value and value specific to you that's going to get you into your next home with a simple call. And why do we need that call? Is so that we can get you pre-qualified, we can get you that application, we can get you that funding. It really is that simple. I try to have these webinars so that you can see the kind of expertise that I can provide to you and that we can try and build a relationship that will get you into a home faster rather than longer. And if you think you're not ready yet, that's also fine because I'm able to talk to you about planning for the future and what you'll need to do in order to get into your home. So moving on from there, I wanted to see if anybody had any aha moments so far, something that was completely new to them. Go ahead. If anything surprised you, go ahead and put it in the chat. I just want to thank you so much. And I've seen that a few folks are ready to move on and learn about additional ones. So yes, we understand that financing is necessary because unless you have that cash, you will need to get some financing help. You will need to get a mortgage. But mistake number 3 is using your bank. Why would that be a mistake? Let's go through it. A lot of times when you go to a bank, banks see your clients as you're just a number to them. And that's, it sounds weird for me to say that or not, but if you've ever had this experience or know someone who has, this is how it shows up. It shows up in that they have stricter guidelines that often don't cater to specific situations. And why would that be the case? Because banks make their money in many different ways. So they don't make their money by trying to figure out how to get a loan to work for you. If you fit their guidelines, they'll loan to you, they'll make some money, and they'll move on. For instance, if anyone has ever applied to a loan at a bank and been told no, or if you've known people who've done that, a lot of times people just stop right there. They think that that is the same answer that anyone else is going to give them and that they just can't get a mortgage. Something isn't good enough. They didn't work long enough at their job. Their credit score was just a little bit too low. They have their own business. They didn't fill out their taxes in the way that the bank wanted them to. Any reason like that could lead to a no. And so what I want to say to you guys is if you've ever gotten that no or know anybody who has, this is something that regularly happens. So how can you avoid that is by working with a mortgage broker instead of banks. A mortgage broker has a broader range of loan options. So we are folks who work with dozens of lenders. So because of that, we can offer you a wider variety of mortgage products, including niche loans such as Veterans Affairs, USDA, jumbo, non-qualified mortgage loans. This leads you to a higher opportunity of getting a yes, as well as the higher opportunity of getting a better overall rate or terms. So moving on to reason number two why mortgage brokers are better is the numbers. The National Mortgage Professionals did a survey, and in September 2024, they published it, that mortgage brokers saved clients an average of $10,000 to $13,000 over the life of the loan. That is money that is in your pocket. We also find that it's time-saving and streamlined process. So instead of applying to 6 different places or 3 different places, you can apply once and the broker will check their database and their network of all their lenders, which will save you time. And mortgage brokers are specifically trained and have the experience in getting mortgages and in working with all of these different lenders. So they often can provide guidance tailored to your situation and walk you through everything, leading to higher customer service. So this personalized support, you're definitely gonna get through a broker. If you're already pre-qualified, I'd be happy to review your pre-approval letter. I can guarantee you I can do better because we're working with around 19 different lenders. I'm gonna get you the best deal. It's likely the biggest purchase you've ever made, so give it a shot to look around and consider the level of expertise and service you'll also be provided. Many folks don't have the experience as I do of buying and selling multiple properties. I've been a realtor for 3 years in DC, and I've bought and I manage my properties. I have 11 of those. So again, book a call with me for further consultation on your pre-quals. That's in your chat box. So what mistake is not having your professional dream team working for you. So you need a team in order to buy a house? Yeah, you do. And we're going to go through it real fast who some of these people are. Obviously, you're going to need a mortgage broker, as we discussed before. Unless you're showing up with cash, you need somebody to get you that cash and make sure that money is there at closing day. You're going to need a realtor. The realtor is going to hear your goals. They're going to hear what you want. They're going to help you balance all the different values you have to find the house that you want. They're going to be able to help you tie together your budget with your realities to get the best house for you that you can still afford. Home inspector, very key. You find this house you love, but if there's something hiding there, it could ruin everything for you. So you want to know that before you buy. And insurance agent, as y'all know, in Florida, we have a lot of hurricanes, we have a lot of floods. No matter what state you're in, you need insurance in order to get a mortgage loan. So those are the folks you need on your dream team. The ones you really need at once is the mortgage broker, pretty much number 1, and then number 2 is the realtor. Mistake number 5, skipping a home inspection. We can get so excited. We love this place. It looks awesome. It's been renovated. You still got to have this home inspection. It could cost you $20,000 to make those repairs that are there, but it could cost you so much more. Home inspectors can sometimes cost anywhere from $500 to $1,000, depending on where you are. Or you might know somebody who's a friend that you could get to come along, and maybe you can pay them amount that you agree on. But it is key that you have that home looked at, especially in single family homes. There can be so much wrong. This is just an example, renovation nightmare. It took 18 months to complete the renovations after they purchased it. Somebody came and stole some of the copper pipes from underneath the home. You wouldn't even know to look at that. How would you do that? If you have someone who knows how to do this, they're going to do it for you and make sure that everything is the way it needs to be. And if it's not, they'll probably advise you on what steps need to be taken to get it fixed. You will not know of deal breakers. You can lose your negotiating power with the seller. You could inherit things you didn't know about, such as mold, radon, carbon monoxide. Some of these things you can't smell, you can't taste, they're, but they will kill you. So yeah, you need to get that tested. You might not know how much future repairs will cost, and you won't know if there's any illegal additions or remodels that you've gotten there. So these things can all be done with the home inspection. That is why it's a very important skip to definitely do one of those. And the final mistake that people might make is skipping the condo document review. I throw this in here because, a lot of people are going to be buying condos. And so it's super important to check that out. What kind of things do you want to generally look for in a condo document review? Now, your realtor will also help you through this, but let's just imagine some of the things you're going to need to know. You're going to look at, are there special assessments coming up? Or were there any large special assessments that just got paid? These are important things to know. You want to know if there are limitations on renting out the unit and what they are. Can you rent it out by the week, by the month, only 12-month leases? Can only a certain percentage of the building be rented out? Is there a waiting list to rent it out? Check all these things. in the condo rules. Are you allowed to have pets? How many? What size? What are the finances like? Have they done a reserve study? How many units are not paying their dues? And what can you find out about that? Does the building have insurance? And of course, as I said, a realtor can also guide you on obtaining and reviewing these condo docs. It is definitely key because you might have the most beautiful unit, but if the building is not financially sound, it could bring you down, and then your investment would be completely gone. We've discussed today 6 key mistakes to not avoid. So we're telling y'all to remember about your down payments and that there are many first-time home buyer low down payment programs, which Momentum Mortgage can help you meet many of them. We're going to tell you to get a pre-approval before you view homes so that you make sure you're not wasting your own time, so that you are actually focused on your success. We want you to say, don't just go straight to your bank for a mortgage because you think that you have a bank account with them, it's going to help you. They don't care at all. They'll take a mortgage application from anyone and they will deny an application to anyone who doesn't fit their box. Try a broker, which has access to multiple lenders, including many banks, and you will have a much higher percentage chance of getting a yes. The 4th step was to have your dream team working for you. This ensures you have what you need at every step and at a fair price. Again, don't skip your home inspection and don't skip your condo review. Those were the main steps today. So I wanted to ask folks to put in the chat, has your time on this free webinar been well spent? Let me know in the chat, guys. We went through a lot. We spent a lot of time together. We talked about how you can estimate exactly what kind of places you could afford. Is it fair to say that using these tips would give you a significant advantage when buying a home? I do think it'd be a safe bet that some of the things we covered today was new and valuable to you. And if it was, I wonder if you could tell me if you're feeling more confident in being able to purchase a home today. Put that yes or no in the chat. I thank you guys so much. I'm hearing from Tara, I'm hearing from Gustavo that they are. That's great. Perfect, folks. Yes. We've got some people who are working for their $25 Amazon gift card today. And for everybody here today, would you want to spend more time with me? My team and I are personally invested in your success in home buying and getting a place for you, your family, your future family, your wealth building, your retirement, everything like that. And if you do, the simple thing to do is to book that free call with me. Now, again, guys, it is a free call. We're going to go over again what kind of home you could afford. We're going to look at your plan for getting pre-approved. Some people want to get pre-approved right away. Some people might be saying, I'm not ready to buy a home. I don't know why I would get on this phone call with Amanda. Let me tell you a little bit why I do these webinars and why I offer these free consultations to the folks here. You might not know, I put in my bio at the beginning that, I come from, a family that didn't have much when we were growing up. I had to be the one to tell my mom it was okay to go to the food bank sometimes. And, I've been the one who, let's say, bought my mom a condo to live in while she was still alive so that she had an affordable, awesome place to call home. So, pardon me, for all of these reasons, anyone who feels like they're not ready, it's okay because you are ready, because your mindset is here to think about becoming a home ownership. You've seen some of the numbers today. You've seen some of the paths on the life that becoming a home ownership can have for you. You can start small and you can upgrade your houses as the years go on. You can start with what you can afford because your costs are going to be a little bit more capped than if you keep paying rent. So all around, I offer this because I do really believe in the power of home buying to create wealth for Americans. I think that we need to be able to take care of ourselves and to do everything we can to bolster our ability to be pillars in the community, support our family, and to support causes that like us. So in other words, that is why we're doing these. So it's not because you're ready to buy a home today. It's because you're thinking about how you can improve your situation. And I want to say thanks to Tara, who has already booked. That's awesome. When you check on that booking link that's right there, It's going to take you to a little calendar. It's going to have a lot of little slots, and you can pick your favorite time of the day, your favorite day of the week out of all that's available there. And I'll be calling you at that time. I'll be sending you a little reminder text messages as well, so that we won't be missing that. This consultative call is so that you can get what you need to know, so that you know when you can buy a house, budget for your home, so that you can become that homeowner and secure your own future. One of my clients said recently she left the call understanding what she could afford and a few example properties. And she says she knows who to call when she's ready to buy. And so this was a property that I ended up showing her that she ended up liking. Nice place, a nice little condo in Orlando, estimated $939 a month, and that includes the condo fee. So we can look at your budget. There's things for all sorts of budgets around the state of Florida. And when you know how much you can afford, you can start to see what kind of options are there for you. So this is now the Q&A time. And I wanted to say that I've got this little QR code here. So if you happen to be on your computer and you've got your cell phone here and it's easier for you, you can take your cell phone, pull up the QR code. It's going to take you to my booking link on your phone, keep it very easy for you. And besides that, I want to encourage you to book that consultation. It is sitting there in the chat. Any other questions that come to us, I want to say thank you to Gustavo, who's also booked. Very excited, looking forward to chatting with you as well. I had a question come in from someone today, so I wanted to definitely go over that, which is, here's the question. Let me read it out loud to y'all. What should my main concern be when it comes to my credit and income, my credit and debt to income ratio? I have 7 months left on my lease and I'm not renewing. No way am I renewing that lease. Is 7 months enough time for me to get into position to buy? So I love this question because there's so many points here. It shows you the key of why a consultative call would be necessary. So I'm going to cover each of these things kind of one thing at a time. So I'm going to start with, is 7 months enough time for me to get into a position to buy? So it depends on where you're starting from. And that's why I always encourage people to have this consultative call. So if you're starting from a place where you might have just had a Chapter 7 bankruptcy and you are going to have to wait 2 years. So, and hopefully, during that time, you have some really good financial practices, pay off anything on time, and get your credit score up to where it needs to be. But, for other people, you might have a job, income coming in, and it doesn't take 7 months to buy. It probably will take you 2. And there's so many factors that go into how long it takes you to buy. One of those could be getting pre-qualified. That's why I think it's a great idea if you want to buy a home to get pre-qualified now, because you will know how much savings you need. You'll know if you have that amount of savings already, or if you need to save it. And if you need to save it, you can start to budget how long it will take you to save that amount of money. The other thing is, so say you have all the savings and you just want to get started and go, you can probably do this in 2 months. And so probably the first week is sending in all your documents and getting that pre-qualification. That could even be done quicker, but you need to make sure you have all your documents, which include things like your pay stubs, maybe your tax returns. We need to fill out an application, which is all online. So that and pull your credit. And then it will take you some time to actually find the house you want. If it doesn't take you that long to find the house you want, you can find it in 2 or 3 weeks. That's great. But sometimes it takes people a little bit longer than that. And then after you find your house and you put an offer in, it will probably take about a month after that to close. So that's why I say it can be done in 2 months. But now going back to the point, the other point in this question, see, it seems like it's one question, but it's actually like 7. I think we've already covered like 3 points. So let's say the 4th point that we're covering is you have a lease coming up. So I like to say 65% of Americans are already homeowners. 35% of households in America are renting households. So it's almost everyone. Let's say a lot of folks have had to make that transition from renter to owner. And do you think that all of them timed their closing just on the last day of their lease, just so that their landlord wouldn't get mad? No, impossible. So what actually happens when you have a lease that you need to, break a little early is, you should prioritize finding that home. Prioritize your pre-qualification and then finding that perfect home. Because when you find it and you go under contract, you can give notice to your landlord. You can negotiate things with the seller to give you additional money so that you can have that in your bank account to help you transition from renting to owning. You can talk to your landlord once you know about this. And this is something you can talk with your realtor about as well, because they're going to know what's common in your neighborhood. So I would never say wait until your lease is up to look for a home. You got to look for a home sooner, as soon as you know you're able to, because this world is full of surprises and you never know what might be happening. So if you can get approved now at a price you like and find a house that you like at a price you like, it's never a bad time to buy, especially if you plan to live there and stay in that home for a couple of years at least. And now we're working our way backwards. What's the main concern when it comes to my credit and income to debt ratio? So basically, that is what a loan officer like myself is going to tell you. We're going to be able to look at all of those things together, as I mentioned, and to tell you how much you're able to qualify for. So your main concern might be, how much money do you want to actually pay for a new home every month? And can you get qualified for that amount? And are there homes that you like in that amount? If you have credit that needs to be repaired, yes, you can start to do that. You can do that by making sure to pay things on time. If you've had any problems with creditors before, try and call them up and get on a payment plan. I would definitely read online blogs if you have things on your credit that are not positive, and see what you can do to make those better. So yeah, you definitely need to care about your credit. And there are little tricks of the trade that some loan officers can tell you about. For instance, if you have a personal loan or a car loan that is getting close to being paid off, if you can pay it down so that you only have the amount of 10 payments or less, if you can get your car balance down to $5,000 or less, then we won't have to count it against you in your debt to income ratio. So these are tricks of the trade. Of course, it can be really hard to make large payments on things, but there are always options to see what you want to do. And that's why working with a loan officer is going to be a major bonus for everybody, because you're going to be able to say, well, I have this ability to do this and this ability to do that. Here's what's important to me. Here's what's not. And we're going to be able to help find the best path forward. So that was a very representative question of perhaps what a lot of you are thinking about. You have one question and there's so many things that go into answering it, which is why this consultation could be important for many people. And I want to encourage anybody else who has a question to throw it in the chat. I do have a couple of other frequently asked questions, as we're not quite done with the hour yet, and I want to provide as much value as I can. So again, people, keep thinking of your questions and keep checking on that booking link so that you can make sure to get your time to ask your question. If you don't have a question to ask me, what we'll go over on the phone call is going to be, hey, so you came on the webinar. Yeah, what were you interested in learning about? What would you want to do with your house? What have you done so far to look for a house? We're going to ask you things like, why would you want a house? Let's get to know about your income level. Let's get to know about your credit. Let's get to know about what you think about buying a house. One of the questions I ask people is, when do you think you want to buy a house? What if you could buy a house sooner? Well, let's figure that out together and play in that realm of possibilities and turning those possibilities into reality. So the next question I get is, how do I know if I'm ready to buy or not? And this is a great question, because it goes to that whole point of, well, I'm ready to buy a year from now. I'm not ready to buy right now. You are not ready to buy because your mind is saying. So if you want to be ready to buy, you will know if you're ready to buy if you talk to a loan officer such as myself, because we will tell you what you can qualify for or what steps you need to take before you are able to buy. Ready to buy is a fact. It's a numerical fact. If you are telling yourself, I'm not ready to buy, that is a mental construct. I would encourage you to talk with me and see what you can buy. And then after you have those facts, you can determine if that is a situation you'd like to get into or not. And I hope that's been helpful, because my whole main thing is to let people know that don't let your mindset hold you back. If buying a home looks like something that could save you money or build you money in the future, learn more about it, take the meeting, and then make the decision. Should I rent or buy? People might be saying, should I rent or buy? Well, a lot of people who've been here on the call so far have been renting their whole lives, because we asked the question if you're a first-time home buyer, and everyone said yes and no one said no. So everybody here has been a renter, or either that or maybe living in their parents' house when they were a kid. So should you rent or buy? Some people think, well, I'm moving. I don't know if I should buy because I might be moving. Even if you're moving, you might live in a place longer than you expect. So I lived in Washington, D.C. for 19 years. You don't know the number of times I met people saying, no, I'm just going to be here for a couple years. And they're kicking themselves in the butt because they ended up staying in D.C. for 5 years, for 7 years. Once you buy a house, you can, when you decide to move, you can decide at that time, do I sell it? Maybe I'll make some money if I sell it. Or do I rent it out and I can have someone else pay my mortgage while I get a new mortgage? And the money that I would generally pay towards rent goes to me paying down my mortgage, building my equity, and the rent that I'm receiving from somebody else is building my equity over here. So now my net worth is going up twice as fast. Should I rent or buy? There are so many things that go into it, but I would just generally say the things that keep people from buying, the idea that I'm going to move, so I shouldn't buy, is maybe not as big of a barrier as it should be. And you might want to consider the other benefits when you're thinking about that question. I've got Cookie asking a question about taxes. I'm going to read this out loud for everybody. Do deductions on your taxes look bad when preparing to buy a home? So I think what Cookie's talking about is we, as lenders, we do have to verify your income. So I'm guessing that Cookie has a business and she makes revenue from the business, and then she has to report her business expenses because you only pay taxes on the profit. This is where working with a mortgage broker is definitely going to get you advantage than working with a banker. You work with a banker, they're going to look at your tax returns and they are going to say that you owe what you say on the IRS. I always like to say that we as mortgage lenders are not the IRS, because we're not. We are here to make sure that you will pay your mortgage and that you're going to be able to pay your mortgage. And so we do that by verifying what does the real income look like. So there are other ways mortgage brokers have to qualify your income to make sure that that income that you get counted for is the more correct amount. These are called self-employment loans. The thing about getting these loans is you can still get a mortgage, but they will come with generally a higher down payment. A lot of times you will not be able to qualify for those 1% down, 3% down, 5% down loans. You're looking at 10 to 20% down. That is something that you need to think about as a business owner. Honest, do I want to be about reporting my business expenses on my IRS or not? And that is a decision that you as a business owner and you as an individual can make. If you owe the IRS, can that have an impact on home buying? If you owe the IRS and are making payments, can that have an impact on home buying? A borrower might have gotten behind on the IRS taxes 1 year for one reason or another. Having a payment plan with the IRS is a really good idea. If you're paying it on time, generally the IRS doesn't really submit things to the credit bureaus until you basically go MIA and don't pay them. The best thing anyone who thinks they're in that situation is to check their credit reports and see what happens, because when the IRS is needing to garnish your wages, that is going to be really bad. If you're on a payment plan and you're making the payments, it might affect it, but you're still going to be able to get a loan. So I'll tell you a secret. A lot of people really stress out about maybe their credit score level. And they're really stressed out, especially people, let's say they have a 700. They're like, oh my God, I wish I had a 790 because then I'd get a better credit rate. Your credit rate is going to be just a little bit better. So it's not as much of a bonus as you think it is. But I do see that we're reaching the hour. And so I wanted to thank people again for coming here. I want to end on time so that all of you can go back to your families, to your fun, to your cleaning, house cooking, relaxing for the evening. You've done a lot today. do one more thing if you haven't already. I'm going to ask you again. It's in the chat. Make that booking. I'm going to follow up with everyone who's been here today to let them know about my booking link one more time in their text messages. And we want to be a partner with you in your growth. Real estate generally is not a one-time thing. For instance, it can be something that lasts through your life. It can be something you refinance out of after you've had it for a while and get some cash out. There's so many cool things you can do. The most important thing, though, is getting started. So I want to encourage y'all to get started. And thank you so much for coming here. And thank you so much for taking out the time investing in yourself. Wish you a great evening. And I hope I'll be seeing you again. Thank you guys so much. And thanks, Gustavo, for that. I'm so glad you guys had your time with me. So exciting to get to know you soon. And have a good one. I'm going to be signing off right now and wishing y'all a good evening. Bye, guys.